Everyone to stick with us versus herd. What I want to talk about today is the Charles Schwab and TD Ameritrade merger and kind of give you my thoughts on that. As you can see right now, TD Ameritrade is up on the day about 6.5%, a little bit, 6.75%. Charles Schwab is also up about 1.5% as well, because Charles Schwab is going to be merging / acquiring TD Ameritrade. TD Ameritrade is up from $40 over the last few days due to the merger talks and actually it getting approved today. And just because it was approved by both companies, it hasn't been approved yet by the SEC. It hasn't come on. The government hasn't yet reviewed it, and they are definitely going to be reviewing this merger. So I definitely want to apologize for my voice. It definitely sounds a little off right now, coming down with a cold or fighting off a cold. I don't know what's going on, but this is not my normal voice. So definitely apologize for that. Definitely apologize for that. But I want to get into kind of some of the details of this merger. Now, Charles Schwab is offering an all-stock merger of TD Ameritrade. It's an all-stock deal worth $26 billion, and TD Ameritrade stockholders will receive 1.0837 Schwab shares for each TD Ameritrade share. So they're going to give a 17% premium on their shares. So they're not getting cash for their shares when they merge. They're actually going to have Charles Schwab holding stock instead of having an all cash buyout. With an all cash buyout, you would then be getting cash for your position of TD Ameritrade, but you're going to have Charles Schwab, which they could then go ahead and sell at that 17% premium, as long as obviously the stock price holds up between now and when the deal is complete. So that's kind of always iffy. But some important things here that I want to highlight, and one of the things that are concerning to me, I was definitely against this merger, mainly because it really creates a smaller pool for people to put their money in, also creates less control over the financial institutions. And for me, I'm as an entrepreneur and a trader, I'm more about freedom, having the ability to choose, and also the customer benefiting for a competitive advantage, right? So right now, there's 5 main players. There's Fidelity, which has 29.6 million accounts, Schwab 12.1 million accounts, TD Ameritrade 11 million accounts, E-Trade has 5.1 million accounts, and Interactive Brokers just has 700,000 accounts. So essentially what's happening is TD Ameritrade and Schwab, when they combine forces, they're going to have 23 million accounts roughly, pretty close to Fidelity, which has 29.6 million accounts. And at the bottom tier, so then E-Trade and Interactive Brokers, E-Trade's only going to have 5 million accounts. So the next person in line, the next company in line, is going to have only less than a quarter of the accounts. E-Trade has 5.1 million accounts, and Interactive Brokers has 700,000 accounts. So where does that leave them in the end? And as you can see, there's been quite the shift in the industry over the last 10, 15 years. 2006, TD Ameritrade buys TD Waterhouse and becomes TD Ameritrade. In 2009, TD Ameritrade buys Thinkorswim Group, and Thinkorswim Group was founded by Tom Sazanoff, which is now the Tastyworks and Tastytrade founder. They sold in 2009 to TD Ameritrade for 600 and some million, and then now that's why we have Thinkorswim by TD Ameritrade. So TD Ameritrade was actually its own entity, but in 2009 it was acquired by TD Ameritrade. And if you guys been trading, you guys have kind of been seeing the mergers and acquisitions over the last few years. 2011, Schwab buys Options Express. 2015, Interactive Brokers buys Covestor. E-Trade in 2016 buys Options House. In 2017, TD Ameritrade buys Scottrade, which that was a huge deal. And now, nobody even thinks about Scottrade. Although Scottrades are now Scottrade customers are now TD Ameritrade customers, which are now going to be I'm a TD Ameritrade customer, which we're now all going to be Charles Schwab customers. And E-Trade in 2018 buys some account. I don't know what that even means. Buys accounts from Capital One. I guess they just bought some trading accounts or investing accounts or 401ks or Roths or something like that. And in 2019, here we are with Schwab buying TD Ameritrade, which is a huge deal. They're going to have $5 trillion in assets under one roof. They're really after this merger and acquisition is going to only leave like two firms. I mean, we're going to have Fidelity, and then we're going to have Schwab, and then we'll see if the what was I going to say? We'll see if E-Trade actually can come up with something. But now the consolidation of people's accounts, we're going to have less freedom, less competitive advantage. Also, for employees and staff, there's going to be a huge layoff because there's going to be such overlap in the two businesses where they're saying, hey, we're stronger together. We can do twice as much with half the staff. And also with automation is definitely not helping at all with any of this. So, there's definitely overlap because TD Ameritrade and Charles Schwab do a lot of the same exact things. So they're gonna combine all those under one roof and automate the rest. So, from the consolidation, what I see is that we're going to get less innovation in terms of platforms. Thankfully, Tastyworks came out last year, 2017 was it? Sorry, just taking a sip of a drink here because my voice is getting a little raspy after this. But Tastyworks came out. We do have Robinhood, which is not really a competitor to them, and Webull, which is also not a competitor to them. So I think it's gonna get interesting. But I think in terms of consumers and the everyday person, it's going to have a negative impact on the trading industry, on the financial markets, and it's going to give people less of a choice. I have a Fidelity account, and I never log in there because with one of my jobs back in the day, I got a 401k through them, and then I've had it ever since. And that's kind of how they start acquiring some of those accounts. So I don't actively trade with Fidelity. I don't have a Charles Schwab account, but I do have a TD Ameritrade account and a Tastyworks account. So I'm not sure how many accounts Robinhood has. I'm not sure how many accounts Tastyworks has. But right now, the big players in the industry, and as you can see, they've been consolidating for the last 10, 15 years. They've been consolidating, and everyone just cut free commissions, and now they're going to be cutting. Just because they cut free commissions is going to come someplace else. And it even says here that they're going to be making money from order routing revenue. And if TD Ameritrade and Charles Schwab can do the same exact thing, charge zero commissions, have less employees, they're going to be making more money. So it's going to give them a competitive advantage. However, what does this mean for E-Trade or Interactive Brokers or the smaller brokerages? I mean, they might still be okay. I think E-Trade has the most exposure, and maybe E-Trade will really start trying to bring things up and get their game going because they kind of leveled out in terms of platforms. I mean, Tastyworks is probably the most innovative platform that has come out recently. Thinkorswim's great, but nothing's really changed. E-Trade's platform is fine, but that hasn't really changed. So we're looking for, for consumers, we're looking for price, we're looking for competitive advantages with the platform, we're looking for good support, and obviously we're willing to pay some commissions for it. I'm not looking for free if I'm getting good support. Definitely not looking for free because we know what free gets you with Webull and Robinhood and all that. So those are just my thoughts on the merger and acquisition. Let me know what you think. Hit me up and let me know what you think about the Charles Schwab and TD Ameritrade merger, if you think it's a good thing, if you think it's a bad thing. But as always, stay safe, stay green. It's us versus herd.